fundamentals of what you're building, right? And you have to be in a situation where what you know, think of it like this, right? So reverse engineering side, the professionals, right? Their entire job, right? And I've been kind of like I've been digging into, kind of like the concept of like, all right, how do we explain this to a way that people can get it, right? And normally you want to have situations that you're reverse engineering stuff because you guys are going to hear this, or if you research it, it has to be information that is out there that you come across because you have to kind of like, be able to get data that you're like, oh, okay, that this is confirmed, right? Because at the end of the day, the only way people learn is to have information that they can trust and believe in, right? So professionals work off a very tight system, right? And their system is very simple. Do not lose more than 2%, right? And when you have that format, right, it just kind of like consolidates it. So they're 1 to 2% losses, but they're also only doing 2 or 3% leverage. So when you start doing 10% leverage, that's a 5x move to that, meaning that their 1% is equivalent to you losing 5%. Right? Does that make sense? Pretty basic. So what I wanted to do here was, start building, from the ground side because we do have a building out of a bear market or in more cautious, percentages. I think will help you guys kind of understand how to scale because there's different markets, different conditions, and you have to stay systematic with the movement of what we have. So when you have a four bag system, right, this just simply means that if you make a trade, right, so if you start off with $500 bag and you lose 20% per trade, right? What happens to you guys is that when you don't understand that the bags have to be the same, you take different things, right? So your first loss will lose 100. Your second loss is where you lose 80, right? And then you lost 60, right? So you can take three losses in a row and then come across a winning, right? So you can come back and say, okay, now I'm going to win, and I'm going to win, my 30% or let's say 40%. And what happens is on the win side, now that you're down 240 bucks of your 500, you're working with about 240, 300. So that 40% win is only going to bring you $120 when it should have been bringing more like 220, 240, right? So you're actually losing about $80 worth of profits, right? So that is where you have to understand that you have to have a bag that's always the same, right? So if you have a $500 balance, right? You need to be able to make 10 trades, right? So whatever you're doing, you need to be able to make 10 trades because we're going to do 10 trades and get results and see what we did in 10 trades, right? So this means that if we took 500 bucks and we were doing um, let's say a 20% stop loss, right? And that's the reason why it's a little bit higher on the stop loss side is just because when you guys first start, you're not going to be great on entries. So you need that cushion to kind of help you out there, and then we'll use leverage to help you out a little further. All right, so 10 trades, you want to make 500 bucks. So that means that if you did each bag at $400, you'd have $100 left, and 20% of 400, right, would be 80 bucks, right? So you need to cover $80 10 times, right? So you would need $800 sitting on the side. You'd only have 100, so you can't do that. So let's say that we take a bag and we say, okay, let's do this. Let's make this bag $300, right? So you take a $300 bag. That means your 20% loss is going to be $60, right? So on this particular scenario, on the other side here, we're sitting with $200 left over, right? So if we take that and say, okay, we got 200 bucks left, I need to cover these 10 trades, right? So my $200 that is left basically is subject to $60 losses, right? So at the end of the day, that just simply means, I'm only going to have what's that, 63 three trades. 60, 80, 6, 120, 180, right? So you can only have 3 trades there. So it doesn't work out there, right? So you'd have to take this bag down, right? So you'd have to say, shit, I have to start with a $200 bag, which means my losses at 20% would be $40, right? That means that I would need, on the other side, I would need $400 to kind of replace the losses that I'm taking. Now here, 200 out of the 5 would leave you 300. It's pretty close to what you need, right? So I would say that this is probably a fair type situation where you can start off with a $200 bag, but you need a total of $500 minimum to start your process. That makes sense?
Yeah, you got to be able to take the lump on the loss and
Yeah.
not just yeah.
Yeah, but more importantly, when you win, you got to be able to get back your losses, right? And you can't get back your losses if you're doing losses on $200 bags and then your wins on $100 bags, right? It has to be consistent, right? So the system has to have consistent amounts of money, right? So this is where we had a thing where you would start off, and this is how we originally did it, right? We would start off with a very simple thing. You would come in and you would start off with $50. And when you started off with a $50 bag, your job was basically to double this bag to where it was equivalent to $200, right? So you needed to turn 200 into or 50 into 200. All right, you'd want to 4x it, right? Once you did that, you would then move your bag to where you started trading $100. And then once you did 100, you'd want to 4x it, right? So you want to turn around, and then once you had 400 profits, you would then turn around and say, okay, now I'm moving my bag to $200. And now I need to turn this 200 into 800, right? And that's how you would continue to just move your bag. And now your bag would become 400, right? That makes sense? So this is how we started off, a very simple process where guys can start with, $100 to $200, and they can do a simple $50 bag. 20% on that is literally $10. So if you had $150, you could start with a $50 bag, and you can lose all 10 times and still have a $50 bag, right? And then as you built, you didn't scale your bag until you were consistently winning your trades. Because if you're not consistently moving the needle positive, then why are you increasing your bag? Right? So that's why when you see Young trade, he can start off with $50 or $100 and he can get to 800 because this is how he was originally taught. The problem is that he builds up to 800, but then he starts trading 800 when he should be just simply 50 to 800. Now use 100 and go to 800, and then take the rest and then put that in savings. Now 200 to 800, right? And keep moving it into savings until eventually he reaches an $800 bag. But what that means is now he's got $800 a trade, but he also has, on the flip side, he's probably put away $3,000 or $4,000 to cover losses on that $800 bag, right? So that's where I don't know how. Maybe it's just the way we used to explain it. We just didn't really break it down to as we scale, right? Because the other part of this, which is I think a lot of people miss, is what we cover now is basically the bigger bag, the different the trade, right? So this is where the system kind of changes. I think that's what you were talking about the other day when you were like, I just don't know, not what I'm trading, but like what's my um, um, my percentages, my leverage, my etc. Right? Because once you have that part done, now you're in a different scenario, right? So now you're like this. So let's say that you have a trade, right? And the trade that you're doing equals 30%, right? It's a 30% trade. So you start off where you do a 30% leverage, and you have a stop loss of 20%, right? And that target is pretty much what you do, right? And let's say that your bag is $100. Now, once you've gone over this trade and you've developed the trade that you're doing and you're consistently winning, which would be you want to be in a position where you're winning basically 7 out of 10 of these trades, right? That that percent is where you want to be because you're not. You remember the trades that we're going after, they're not actually 30% trades. They're 90 to 180% trades, right? So if you do the trade correctly, it's half of a half, which means there's a lot of room for error, and there's a lot of room and potential to hit your goal. So your winning should be a lot better um, than the losing side, right? And once you hit your 7 out of 10, you'd want to do this. We call it the four. It's a four process, right? So if you could do that 4 times, right, then you would basically say, okay, I've got this trade down, right? I've done 10 trades 4 times in a row. I've won 7 out of 10. I'm winning 30%, losing 20, right? Now, during that process, you're also going to learn to adjust your stop losses, right? Because you're not going to take a 20% loss on those 3 losses simply because you're going to be moving your stop loss up when they move. So you could take a 10. Sometimes you'll break even. Sometimes you'll take 10%. Just like on the wins, sometimes you'll take 30%. Sometimes you move it up, take 40 or 50, right? So there's a lot more that you're winning here than you're losing. But just on a normal scale, if we looked at this, right, that just simply means that if you're winning 7 out of 10, right, that means you're at 7%. They're at 30%, right? So this is where we can have the simplicity of like looking at what we have. So this basically equals 210%, right? Your losses, if you take 3 losses, that just means if you lost fully, you would lose 60%, right? So at the end of the day, your total, when you take this all here, would be 150%, okay? Which means whatever your bag is, right? Whatever the bag is, you should have 150% of that. So if you have $100 bag, you make 10 trades, win 7 for 30%, lose 3 for 20%. You should have, after 10 trades, you should have grown your $100 bag. You should walk away with $150 as profit. Does that make sense?
I get it.
Yeah, so this is just kind of like a basic system, right? This is the format that we look at and kind of keep it simple. Now, what I've been doing was, and this is real, this is just basics, right? So the next part of this, kind of where we got a little more systematic, is I started looking and one thing is that we removed the because this is just how we were set up to basically systematically know that we're doing well, 7 out of 10, right? And that's because your goal is half of the half, right? So if a target is a certain amount, a 3.5% target, we're doing a 1.5% move. We're targeting 0.7%, so half of the original move, and then half of the lowest projected part of the move to guarantee that we should have a higher win rate than normal, right? So this is where I think sometimes where if guys are going along, um, they should be able to hit these type numbers if they're trading properly, right? So right now, what I'm looking at is how to um, explain or get these results without having any type of like um, what they say expectations, right? So if a guy's not winning 7 out of 10, he feels like he's doing a bad job, right? And that is where I've been really kind of looking at um, the professional side of what everybody's been talking about, because the reality is that professionals, right, they win 3 out of 10 trades, right? And so for them, their job is to win 3 out of 10, but their loss is 1%, which is equivalent to us losing 10%. Is that you, babe? Hey, babe. So what that means is it's equivalent to basically us losing 10%, right? Because their leverage is 1, 2, or 3%, and our leverage is 10, 20, or 30, right? So what this comes down to is that how they're productive is this, right? Their losses is 1%, and their wins is kind of where they go. Is their wins are equal to 5 to 10%. So it's a very different type of like scenario, because they work off commissions and they're not really trying to build a portfolio, because you have to understand that they're building this entire thing based off one thing. If it basically year end, their total is 20% gains. Okay. Now and that's portfolio wise, right? 20% gains. So you gotta, now if we look at that, I would say their gains are probably based off of, let's say a $10,000 bag, right? Or let's say 100,000, because normally they'll get $100,000 account, right? That means that they're trying to make 20K in the year, right? And if they have a half decent account, which would be a half a million, but so this is their kind of their gains, right? It would be about 20K. So this is the difference between what we do and how professionals do it, is that their entire gains are 20% of 100,000. They're trying to make 20K. Now we have guys right now that are starting to hit their little grind where they're making 1,000 a week, right? So it's a big difference in uh, 56 weeks. You know what I'm saying? So you could triple what they're doing, right? Minimum. So we have to take that formula, that ideal, because this is, remember, what we're doing here is we're reverse engineering the processes that are common and used by every retail investor. So we have to be able to look at this and explain this to ourselves and use the tools that we have and why the tools work and how to use them properly, right? So for what I mean by that is, for instance, let's say people use leverage, right? Like we do. The concept, and so when I say, so Joey, when I say to you, I said, hey man, here's a trade that did 10%, right? And then I say to you, man, if you would have used leverage and put a 10x on that, you would have made 100%. When you think of leverage, what do you think it means?
Leverage means like whatever you
I guess the better
whatever you're
question,
going
I think
whatever you're going to put up there, you put 10 times. So it's like, my understanding is like somebody's fronting you, right?
mm-hmm.
Like 10 times what you got, and then it pays out. But it also takes, like, it can go the other way and you lose your 10 real fast too.
Yeah. So I guess the question would be this: when you think of leverage, right? And you go, man, I get to use this leverage in my toolbox. Like to you, like
Mm-hmm.
when you say it, like what's the how to ask that question? Like when you think of it, how do you perceive it? Like what does it mean for you when you say, damn, I can do 50x leverage. So instead of 2%, I could have made 100. Like what is that? So when you think of leverage, what does that kind of mean?
Leverage says to me, whatever my profit is, it's going to be times whatever I set my leverage to be.
Right. So when you think of that, the process of that working for you, what is that? How does that?
Mm-hmm.
How do you like think of that? Does it? Is it like for you? Is it just like, man, this is I can make 5 times more, 10 times more?
Um, well, that's where it get always people are like, well, you go to set like this and that. But I don't set like how much do you want to make? Like as much as I can. I hustle 24/7.
Yeah.
But like that's why I was asking you in the beginning. Like, is there a set process with percentages based off of like I'm just going to grab a let's say I have $1,000 bag, a $10,000 bag, and $100,000 bag, right?
Mm-hmm.
Like you said, that's all going to change how you trade with those bags. So just like the other stuff, like I'm looking for like, is there an equation that you use to if I have this much money, then I'm going to use this much leverage and so forth and so on like that.
Yeah. So because
Like instead of me just going, oh, you know what? I feel cocky today. I feel like I'm in the mood to ball out. Fuck it, who cares? Like, because that is me.
yeah, yeah, yeah. That's what I'm saying.
that's
So
and that's what I need to
when you
control
think of
more.
that, that's what I'm saying, right? So when you think about that and you go, man, so I could ball out today and put 10 grand in here and make 10%, or I can put 10 grand in times 10,
Right.
right? I think that's where a lot of times people get into a situation where they perceive leverage as simply just a multi, and it's called a multiplier, right? And it
Mm-hmm.
basically just means I'm going to multiply your gains. So I think most people just see it as like, yeah, I'm getting 10 times more or 50 times more. Or shit, it lets me do 100, right? It's
Right.
crazy, right?
But it's you're multiplying
Your
your
risk.
profit. You still have to have something
Yeah.
put up there.
Yeah, yeah. And so this is where, you know, I think the problem is that when you don't understand the why to why something exists, you use it improperly, right? Where leverage
Yeah.
isn't designed for you to um, go balls out. It isn't designed for you to, go crazy. Leverage
Mm-hmm.
is designed to allow you to be more patient. Or I would say like this: leverage is a tool that, if used correctly, can allow you to wait for more confirmation and safer trades and make up the percentages that you didn't take by trying to get a bottom. Because what does everyone do in trading? And trading is this, right? Catch the bottom, sell the top,
Mm-hmm.
right? Like, I don't care who you listen to, they're always like, yo, buy the bottom, sell the top, right? I'm trying to catch the bottom. I'm going to catch the trade off the lowest support. This is a bottom here, right? It's always bottom and top, right?
Mm-hmm.
So when you use leverage, you use it within the concept of what everybody says: bottom and top, right? And the reality is that leverage is actually a tool. If you look at it and use properly, you can use it to make up gains of risk, right? So, for instance,
Mm-hmm.
instead of trying to catch a bottom, if you allow a trade to move into a solid position, right? And this is where, understanding the moon indicator and volume, you'll know when trades have better uh, chances of being successful, right? when a trade has a higher percentile of being successful, then you can get a better trade. Now, what that also means back in the day is that you would have to wait for a trade to show a pattern, momentum, a breakout, and then the retest, right? So a lot of people who are waiting for confirmation, right? If you listen to like, oh, I need confirmation, confirmation, right? Good traders will have the word confirmation out of their mouth, 5 times before they enter a trade. And what they're doing is they're waiting for confirmation of a move, head and shoulders, a bull pennant, a bull flag, right? A cup and handle, a retest, a breakout, et cetera, et cetera, et cetera, right? But they're always, whatever their strategy is, they're waiting for confirmation that their strategy or their chart or their basically speculation, let's just say it like that, they're waiting for confirmation on their speculation that they're possibly right, right? And then that's when they enter. Where you can take it a step further and use leverage and go, okay, based on your speculation, you want to see this happen. So I'm going to sit back and go, okay, you think that when it breaks out, it's going to come here and retest and then go up. So I'm going to wait here and I'm going to see the breakout. I'm going to wait for your move, which is the retest, and I'm going to see what that move does. And then when that becomes a stronger move, then I'm going to enter. Now I might, and let me kind of like give you an example, right? So let's say here you have Doge on the 1 hour, right? You guys see the chart? So these are, let's go over here. Let's take a look at this breakout section here, right? So this is kind of like what we're talking about. So you see here, this is where we had the 1 hour Doge move. You guys see my screen? So this yellow arrow here was the 1 hour Doge moon, right? Now we expected that to have this white arrow, this pullback, right? There was 2 levels of pullbacks based on previous support zones, right? This support and this support. Very simple. So we knew that we were going to get a pullback from that 1 hour, and it can either come to here or come down to this next one, and then from there we expected to go up. It did not hit either one of those support zones. Okay? Now, it broke out faster than it should have, which just means it's just market. People started buying early, but at this time, because the market conditions are becoming better, it didn't drop down as far as it wanted and was able to actually break out of its normal consolidation, which if we kind of put a parallel channel here, it would have looked like this right here, right? So we have our bottom and our top of our consolidation there, and I'm gonna make that a 4. I'm gonna make that yellow, and we can see that once it broke out of that consolidation, Control D, delete, boom. I'm gonna go over here. We can see that instead of these arrows breaking out, we had a moment where it broke out of the consolidation here. It then went back and retested like most people want, right? That's kind of like a normal. Can you guys see my chart on there?
Yeah, I see it.
So on this situation, we had it where it did what it was supposed to do. So basically a simple trading strategy, right? That's out there is break current resistance, which it did. Retest current resistance, which it did. Which then brings it to a part where this is where everyone would have put their limit orders right there. So those limit orders would have been set right there. And then from there, everyone would have expected that move, which is, we can tell that was perfect trading. Break resistance, retest the resistance for support, and then it goes up. Now Doge is a coin that's being traded by a lot of people because it's a normal coin. So you see the move that happened there. So it's consistent with how people trade in the retail style, right? So now once that happens, there's going to be a level of percents that once that happens, there has to be a pullback that happens, because no matter what, we're going to have a section which we call the sell zone, meaning the people who bought at a certain level have a percent that they want to take, and just like how you set your take profit at 30%, they're doing the same thing. There's an area that they're going to have that it will always cause that pullback, right? Now the next move from that pullback are all the people that missed the original order, and they're going to get another section where they're going to get that last buy section, and they're going to create the next wave, which is basically wave 3, right? So here's your breakout. Wave 1's the push, wave 2's a pullback, and then we have your final wave, which is the push that basically happens after that, which is this move here, right? Now, the thing about having, or understanding what's going on out there when you reverse engineer it, now you can sit back and go, okay, I don't know, I have two options here, right? If I know that when it breaks through this resistance area, it's going to pull back and retest, right? I can go, well, I want to see how far it pulls back. So let's say that this retest pulls back, but it doesn't actually retest, and it pulls down to here or even here, right? And I see that by being patient, I can come in here and say, oh, it's pulling back. I'm going to wait for it to make its next move, right? Until it makes a move that shows me that there's momentum here. Or with us would be a little bit different. We're waiting for volume, right? The reason why this trade actually worked and pinned out, you can see here on the moon indicator, is the volume went up, it broke up to the 10 threshold. We see how it retested here, and then we seen the momentum right there, right? So right here is where we would be buying for a long position because we can see that it's pushing to the upside there, right? And this allows us to, kind of have different, things that we can use to decide when we pick. But just if I was just kind of like out here winging it, right? And I was just going by charts, and I see the push, I see the breakout, then I see that I'm going to wait for people to sell here for profits. It pulls back, and now that it's pulling back, I'm in this area and I start to see it go green again, which is this candle here, and I start to see this movement. Once I see these candles in this section here, I can come here and go, okay, I'm going to get into this because there's momentum here, and we're going to ride this up for whatever reason, right? So just to kind of give you an idea what I'm talking about, if you play this trade perfectly, right, which is, let's say you bought the bottom and you bought that bottom of that channel, and then it ended up playing out to where you got the move and you rode it up and you did the best trade possible, right? Which is, when you look at it, it's an 8% move, right? Now, if you're a regular trader and you're playing that, a professional trader, you're working on a 1, 2, or 3% multiplier. So in reality, they would have got at least 24%, right? Something like that, 16 to 24%, or they would have got their normal 8%. So they either got 8, 16, or 24%. Does that make sense? Because you got to keep in mind, they're only risking 1% stop loss. Okay, which if we go down here, we measure out, their 1% stop loss is here. And that means if they're getting in on that bottom channel, they had that much of a pullback. If they were getting in on the middle, they could only pull back to this level here. So that's their 1%. That's with no leverage, right? If they added, a 1x, leverage to that, that just means that when they did their multiplier, right, that's their 1x. If they did a 2x, then at that point a 1% move would be 2%. So they would only be able to use a 0.5% space here to determine their stop loss, right? So their entry had to be better. They would had to play the bottom entry there, right? But that's kind of where they're max. So you see where they're limited here is they're limited in the fact that by being very tight with a stop loss, right? They're in a situation where they can't use leverage for their advantage because they don't have the advantage of they don't have um, the luxury of having a 5% stop loss because they're working with a 1% stop loss. They're working with a 2% stop loss, which basically means if you're doing a 2% stop loss there, the maximum pullback can only be 1% because your multiplier is times 2, right? So that's why when they make this move here, right, by being the systematic or a professional systematic trader, they're trading on impulse candles, head and shoulders, breakouts, whatever. So they would have to wait for the breakout to go. Their trade would be somewhere here on the retest, right? That would be their trade. Their 1% pullback would be here, right? And then this trade would be equivalent to either 7% or if they did a one, a 1x multiplier, right? Um, they could get 14%. But the maximum that they walk away with is 14%. Does that make sense?
Yeah.
Yeah, we talked about this a couple nights or a couple nights ago.
Yeah. So, but this is why we have to cover it over and over until we figure out like how to just put it in a perspective where how do we build this into, right? Because this isn't about me going, okay, this is how I trade and understand. This is about reverse engineering, right? Here is the concept, right? And this is kind of what I was saying the other day, like a couple weeks ago. I was going over impulse trading or impulse candles, and you were asking a lot of questions like, well, what's your stop loss? Where are you going? I'm like, no, I'm not doing a trade. I'm just explaining how people do impulse trading, right? In trading 102 reverse engineering, you are the guys who have to look at this. I'm just giving you the data of how things work, right? You guys need to take the course and now you have to reverse engineer this shit to where it makes sense to you, right? So the information I'm giving you is simply the data you need to make the to build your trade, right? This is your system, right? So how this works is the maximum that somebody could make here is 7 to 14%. So let's say this is what I was saying, like when you use leverage, right? It gives you the courtesy of waiting for things to happen based on how you trade, right? So if we were in a situation where we want to see the retest and then the breakout, and we see that breakout, and then we say, okay, on the next pullback, right, whatever that is, when that becomes a go candle, you see how it starts to move up here, we get a red, and then we get a green. Now we would be working on a different time frame to get our entry, right? So this would be um, this is where this is May. So this is the pullback happened on April 14th. So let's go to the 10-minute area. I'm going to turn this white box here a little bit bigger here because I want to hit this section here. So now I'm going to go to the 10-minute because that's more about, or 10-minute or 1 minute, depends on your entry. That's what I'm saying. Like once you build what you're doing, it changes how you look at everything, right? So here's our section here. So let's say that we're watching this trade and we want everybody to do their trade, right? So we have a consolidation zone down here, right? See our consolidation zone. We see the breakout of the consolidation zone, right? Then we see the retest that happens, right? Then we see the breakout from the retest to the top side, right? And there's a couple levels here as it starts to fight through where we can see it hit a level, come back down, hit a level, come back down. Now, we're always waiting for one of our confirmations are the 1, 2, 3 move, right? We like to see a move, we like to see the pullback, we like to see the next move. Now, if I was watching this move here and I was like paying attention to what I'm looking for is always volume, right? So in your main head is what you want to see is volume. So this is the first push. The second push I see is a lower low. It's not really breaking out. And then finally, I see where it breaks out and makes a higher high. Now, when it has that pullback, right there is where I would be thinking to myself, okay, I'm going to get this next surge because I want to head up to this area here, right? So that's kind of like the first opportunity you can take. Now, if you wait and you see that first surge and you're like, all right, and you see people, you see that downward tick here where people start taking profits. As they're moving down, there's the first real move there, and then we get another push up here, and you can see that in this section here, it really just became a sideways move, right? A lot of, here's the top, right? And then all of a sudden you're like, ah, this doesn't have a lot of volume, and then we get that big pullback that drags us down to here, right? Now that happens, and you're like, all right, so they got their move out the way, so now we're in a position of buying the uptake, right? Which just simply means green. Here's a top, there's a pullback, and then the next push up is a higher high, and then I get a red candle, right? Now I go and say, okay, I'm buying at that level. Now this is not a way to put in a trade. This is just explaining to you that what leverage is supposed to be. Once you have a confirmation, because we had the first breakout, we had the original push up, we had people take profits, and now they're coming back for more, right? And this is that next move. And I say, okay, I'm going to get in here because now I've seen all this volume here. I'm seeing that there's volume building. I'm going to get in here at this price here. Now, keep in mind, earlier they got in off the retest, right? So they had the breakout, they bought in here. By getting in on that retest and playing a perfect trade, they were able to make that 7% move, right? Now, that times 2, the maximum is 14%, right? By me being patient and waiting for everything to kind of like come my way to where I'm looking for pullbacks, I'm looking for higher support, I'm looking whatever I'm doing, right? And we'll kind of go over this trade and I'll show you using our method what we'll do. But I'm just saying, if I was waiting here and I was being that patient guy until it looked super bullish and I got in here, now my trade would be at this position here. Now this move to the top is literally, it's not 7%, but the move to the top here is only 5%, which is still a good move, right? Let's say that I was even more patient and I waited for this bigger pullback, right? And I said, oh, this is even a bigger pullback. And then I say, oh, this thing's really bullish. And I wait to here. And I only get in this position and I'm getting the full momentum of the trade. And it only goes 3.5%, right? Now, to most people, you would say, man, but if you would have traded this the way that everyone was trading, there was a resistance, there was a breakout, you could have bought the retest and did 7%, right? And then you could have done a leverage on that of, let's say, 10x. So you could have made 70% on this trade, right? But what you don't understand is that by doing it that other system way, that system is only 60% right, which means 4 out of 10 times it's not going to do what it just did, right? Because it falls back even further. Maybe they do a liquidity grab, right? Because it's an early move, right? It's considered the first trade, it's the first wave, right? And we don't know how much momentum's behind that trade because I didn't see the first pullback, right? So once I see the first pullback, I know whether it's a strong move, a weaker move, or there's no volume, right? If I waited for multiple confirmations to where I was like, okay, this looks fucking good, and then I get in at the latest fucking part possible, which is half of the original move, right? Most people would say, man, I lost out on that other, half the trade. But here's the reality. If I'm trading a way that gives me multiple confirmations, right? And all I have to do is simply use the tools that I have to make up for my discretions. So by me being safer, I don't need to use a 5x or a 10x, right? which a 10x would be a max. That's kind of like a risky move if you think about that earlier move, because that means that a 1% down move, you know, you're giving up 20% to 30% of your bag if you're wrong. But by me being more patient and waiting for more confirmation, I can now go with a 20x, right? So now my 3% move, right, is now times 20. So I can get the same 60% that everyone else got, but what I removed was 50% of the risk. That's why when I talk to you guys and I say, you know, the new Trading 102 is going to be it's a very simple thing. By being a systematic trader and you remove 80% of your bad trades, right? Just think about that in your head. If you made 100 trades doing what you've been doing, go think about your last 100 fucking trades, right? The times you win, the times you lose. If you removed 80% of those fucking bad trades, would you have been successful? Probably, right?
Yeah, of course. I mean, it's like squeezing one end of the balloon. It's like, what are you going to do if you're not doing anything different?
Right. So that's where I started thinking to myself, like, man, you know, using the tool that you have, right, to have more confirmations and being able to just the professional trader walked away with 7%. The professional trader that had a little balls on him walked away with 14. You let the entire trade happen. You confirmed the trade was happening. You saw the patterns come out. You waited for the perfect time when momentum was the strongest, and you took the best possible fucking trade at the best fucking time, and you just used leverage to make up for the difference that you didn't have by waiting. Yeah, we gave up 3.5%, but all I did was use leverage to make up for that 3.5. So I still ended up with my 60%, but I eliminated 50% of the losses that everybody else took. Does that make sense?
Yeah, absolutely.
So that's where it's the mindset of being a trader is so important, because you have to understand like how to break this down. So now let's take all this shit that we don't need. Let's zip through this real quick. I don't need all this. Get rid of that. Okay. There we go. Because all that happens here is this, right? Fundamentally, right, we know how we trade. So if this trade was happening, right, and let me get rid of these blues, yellows, I don't need all that. Because a lot of times I go back and I'm looking at all that crap. All right, let me get rid of that. Perfect. Okay, there we go. Okay, so here's our zone, right? It's very simple. This is where the trade happened, and we're looking for this move here on the 1 hour. That's the trade that we're looking for, right? So if we looked at this, or even the next one, we'll put two boxes here. And just so we can kind of walk through the simplicity of being a trader that is patient because they understand how to use the tool they have, right? Versus jumping trades. Like the other day, I was listening to Joe, and Joe's like, I gotta get into a trade sometimes, right? And it's like when you're a trader, it's it's fun. Like I love, this is why I love having courses and classes where it's live. A lot of people teach courses and all they do is talk and show you how they do shit, but that's not where you get better, right? I love hearing what the fuck you guys are thinking, because what we're solving with the trading course 102 is not how to fucking trade, but how to execute, right? And that's where the execution of all these strategies, head and shoulders, you know, support, resistance, and all this bullshit, it really just comes down to the person, right? Did you buy correctly? Did you enter correctly? Did you, you know, whatever correctly, right? So you have all these sections here where you have all these probabilities, right? That's where it comes down to how do you understand why and have a fucking plan here, right? So now let's go back here. We got these three boxes here to look at. So I'm gonna go back, and this is just a simple concept, right? When you have a strategy that you're using, right? And I can use just basically, I don't even need all the other shit. I can come here and make this pretty fucking simple. If I went off of a simple concept of a green moon, right? So we can see in these areas here where here's a green moon, right? And if I see a green moon and then I see volume hit a certain level, right? Break through the zero line, right? That's normally going to give me a good trade, right? It's pretty simple, right? So this is where, let me control Z here. And this is concept wise and things that we do. We can kind of go through here and just look at the basics, right? So what I'm looking for is, if I'm looking for volume, which is the only thing that matters, I'm looking for areas where volume is continuous, right? Meaning that it stays and it starts to build momentum, and has its moves that it has, right? And processes that we use, right? So let's say 4 hour, right? Let's do 3 hour. So if we're looking at like moves that are happening, and we go through here, and we'll kind of work our way back. So let's go over here and say, okay, I want to know when there's a 3 hour green moon, right? So here's a 3 hour green moon. I'm gonna make that orange. Here's a 3 hour green moon. Here's a 3 hour green moon. Here's a 3 hour green moon. Now, for me, the moons that I really want to have are going to be the moons that basically, once they have a 3 hour, I want volume to have a certain perk to it, right? And that's just, once I see this, the 3 hour moons happening, I want volume to be on a 1 hour level, um, at a certain peak, right? So I'm gonna go to the 1 hour. So these are just here's your, and I'm gonna go to here, this latest green moon. So all these orange lines are simply 3 hour green moons, right? 3 hour green moon, 3 hour green moon, 3 hour green moon, 3 hour green moon, 3 hour green moon. Okay. So now what I want is volume, right? So let's say I'm using, let's say the 30-minute volume, right? Now, when you do a trade, I want the 30-minute volume to have what's called a retest, right? And it's simply like this. This is what we mean by that, right? It just simply means this, that once the volume on the 30-minute, right, breaks above or touches the 10 threshold and has a retest, that's where you want to see some type of entry, right? Which would just mean that when this green moon hit this orange line, if I moved it to where the 30-minute broke the 10 or went back and retested, this would be right here where I would be entering, right? See how it breaks down there, and then we start up. So I'm just moving it to where the 30 minutes started up, right there. And you'll see here. So here we go. This is Control C. Okay. So this is the next time that we have a 3 hour moon right here. Now you can see that I have a 30-minute going up, but I want to catch it on the retest. So it goes up here, it comes down, and then right here it starts up again here, right? I'm gonna go over here. This is the 3 hour moon, right? I want it to go up. It comes back and retests and starts here. All right, so here's my 30-minute moon. It goes up, it retests, and starts up here. So now what I'm doing is I'm just moving these to areas that after the 30-minute volume has a moment that it breaks down and starts to move up. That's where I would be looking for entries. Here, I see a breakout, starts to move down. This would be the entry. And same thing here. It breaks up, it moves down, it starts to go up. Okay, so now what I'm gonna do is, now that I have these set up here, now I'm gonna take a look at how they play out, right? So now all I'm going to do is put these on the next map up, right? So here we go. So these are my current possibility trades. Okay. So now I'm just going to click on this chart here. Now I have these orange arrows here just giving me basically a 3-hour moon with a 30-minute pushing up and then doing a retest, right? So now if I slide down, go to a 10-minute, I can see these on the 10-minute scale, right? And now all it is this, right? And that's kind of playing in now, but let's take a look here. So on this particular trade here, we have the pullback section, right? And this is where it would create an entry point here, right? Now, we're always looking for the kind of like saying, okay, in this particular time, the only thing that could take me out of a long would be a short, right? Meaning a pullback. So when this particular trade happens and I would be entering here, if I simply said, you know what, I'm going to wait for this to show confirmation of a long, right? So if I looked at this current section here, which is basically a little bit prior and to where I'm at, which is here, when I get that, that's the box before that's happening. I could see all this here. So this is what Joey will say, like, okay, so everything at the arrow and beyond hasn't happened yet. So the white box is where we're currently at, and the orange box is the future. Okay? Now, all that is happening here is the orange arrow just represents a very simple moment in time. It's the time that there's a 3-hour, and it's the time that the 30-minute is starting. After a push up, it went down, and it's starting up again, right? If I looked at the previous time, I see a few things here. I see a move where the blue arrows have already been here, where there was a push up, there was a pullback, and then you could see that higher move there, that breakout that happens, right? Now, if I'm looking at that, I know that I'm currently in a pullback, right? Which is where I want to be typically. I want to be buying the pullback. So it looks good. But if I look, at that further history, I can see that, it's not really like I want more confirmation, right? I want to see um I want so kind of like think of it like this. This is the low zone here, right? That's where the biggest pullbacks, if it did pull back, would go down to this level here, right? And that's kind of where you go, okay, that's the low entry or the low part of this previous channel, right? That exists. And that means my entry, if I'm playing a certain entry, would be off of that lower level, right? Currently at the orange, I'm seeing where it's pulling back, and it looks good for a move to the upside, right? Now this is where you can calculate, okay? This is part of the system. So if you said, okay, here's my entry point here, I'm getting in on this long position up here, which simply means from my entry point down to the support, or the current support area, the lower level, that I have to measure that, right? So from there to my entry, I'm going to measure that out. That's a 1.75, right? So this pullback is a 1.75. All right, so we'll just say 2%. Now, what that basically means is that if I decide to make this trade, right, I have to mathematically put in a 2% pullback, which means that if I'm doing $1,000 trade, right, you got to start thinking about where you're headed. If I'm doing $1,000 or $2,000 trade, right, you typically want to do at least $1,000 or $2,000. So let's just say 2,000, right? So I'm doing a $2,000 trade. This 2% pullback, if I do a 10x, right, that 2% is 20% of my money, right? And what I'm going over here is also the concepts for you guys, risk and reward, right? So a lot of times when I talk to people, their risk versus reward is equivalent to a 2 to 1, right? Which means that if they lose 500, they'd want to be able to win. They at least want to be going for a 2 to 1. So if they could lose 500, they would like to win 2 500s with 1,000, right? I like 3 to 1, right? If I lose 500, right? I want to win not 2 to 1, I want to win 1,500, right? Versus where they're at, where their 2 to 1 is lose 500, win 1,000, right? I want to always have a better scenario, right? So this is just the concept of understanding risk and reward so that you can start putting this into your head, because you need to, this is how you can reverse engineer a lot of these things based off these strategies, right? Because the strategies that people are teaching you or that you're learning, support resistance, head and shoulders, all that shit, it has a certain percentile of success, right? And this is what you need to be aware of, right? So calculating all this kind of puts you in a situation where, you know, understanding what you do. So if we make this trade here, right? This right here would basically be considered trade number one. All right, trade number one has a 2% pullback, which means that the most we could do is if you're, you know, maximizing here, right? You would basically say a 10x leverage, right? Your stop loss would be 20%, right? And your target would be 30%, right? And that's where you would kind of be set up. So you'd have $1,000 bag. So we'll say $2,000 bag. $2,000 bag. And we could lose, stop loss here is going to be 20. Target is going to be 30. And that's kind of like the breakdown there, right? So we're willing to, you know, take the scenario and have an L would be 400. A win would be 600, right? And our target that we're going for, right? That's kind of where it gets tricky, because we don't go for that 2 to 1 side, but we want it to have that possibility to where we can, you know, get to that scenario, right? 30% wins, 20% losses, but we want to win 7 out of 10. This is where the system, and I think the risk and reward that a lot of people hear about, or, you know, kind of research on the internet, you know, it gets kind of like confusing, the how the strategies that we do or we taught versus what you hear on the web, right? So this is where trade number one would put us in a situation where you can do a 10x, right? Losing 20%. Um, Reward would be 30%, so your loss would be 400, your win would be 600. To make this a valuable trade, you would change it up a little bit and say, okay, what I need to do here is I don't want to lose 400, so I'm going to change this strategy and I'm going to take it down to where the correct way to do this for risk and reward would simply be this. I would do a 5x leverage, right? My stop loss would be 10%, right? So now my loss would only be 200. So my stop loss would be 10%. And then my target would still be 30%, right? So now I'm doing a 5x leverage. Stop loss is 10% instead of 20. My target is still 30%. So which simply means this. My L, right, on a $2,000 bag would simply be, instead of my 400, I would only lose 200. So I'm doing 5% there. Because we're doing a 10x there, right? So let's see. Double check our math. So our 10x up there, we lose. No, I guess we'd only lose 100 on there, right? So yeah, so up here, our loss would only be 200, right? Because we're doing a 10x. I'm used to doing 20. All right, so 10x, $100. So we lose 200 here. Our target would be 30%, so 3 to 600. All right, that makes sense. Perfect. All right, so on the 2,000, if we did a 10x, we'd lose 200, win 600, right? That's not a bad position to be in there because you're losing 2, but your risk is 6. So this is where we're getting our 3 to 1, right? The other way to look at this is if you're being more conservative would be a 5x here, which means just simply on the loss side, if you're taking an L here, you would basically only lose 100 on a 5x leverage, right? And then your win would still be your 30% move right there, but you would need to have a higher move there. So that means we would probably take our target down a little bit here to, let's say, 20%, right? Which just puts it, kind of like, let's just split it up. Let's take the 15% win, right? This just means that we take a 300% win, right? Now, the difference in these two particular trades is trade one is it's a 10x leverage, 20% stop loss, take profit is 30%. It's a $2,000 bag, right? You can lose. If you lose there, you lose 200, but if you win 6. If you take a safer approach, you simply lower your leverage to 5%. This increases your stop loss, section. If you keep it at 20%, it gives you more section to kind of have a bad entry on. If you cut it in half, that means you only lose $100. And then your take profit, obviously, depending on the targets, with a 5x, you're maybe targeting 15 to 20%, but you're still winning 300, right? So these are the two options that you can do with this trade, right? Now, obviously, breaking it down and looking at targets and other things that we do will determine kind of like how you break that down. But I just wanted to put that there so we have the trade number one, right? Now let's go over here and say, okay, back to what I was talking about. Now, the only thing that we can lose is if this pulls back and it has that one moment there, right? So if I decide and I say, you know what, okay, I see the probability of the future, right? Speculation of where it could go, which is basically the pullback to this zone here, and then run, or it could just maybe go sideways from here and then start to push up, right? So if I let that push up and I get out of this consolidation zone, right, where basically what I'm doing is I'm waiting for more confirmation, right? And I allow and I say, okay, I'm going to sit back and I'm going to let the next trade kind of manifest, right? And I wait for the next move to happen and it pushes up to this area here, right? And now I see this next push and I see this. Then I see the pullback, right? Now on that pullback, I'm waiting for it to go into green candles, right? And I can see right here it starts to go into green. And this is where I decide that now that I've got out of this, especially that I've seen this bigger pullback happen, right? This liquidity grab here kind of plays out for me. Now I see this big pullback and this liquidity grab, and I've seen the bounce happen there. Two types of trades I could have got, right? I could have took that big pullback and jumped in somewhere here because I like I'm waiting for the pullback. I'm waiting for that big move, and then once it reverses and starts to go, maybe I enter here. That would be where you would become a little more of a seasoned trader, and you would get that pullback. Let's say you let that run, and then it goes into its pullback mode, and then you just wait for that next pullback, and you get the next green candle, and you get in here, right? Those are two confirmations that you can wait for. Now, if you get in on this late side, remember, what are we doing? We're going for a particular target. This gives you a 2% move, okay? Now, the difference is this. Now that we're in this second trade, right? So this is trade number 2. Now that I've been more patient, now that I've let that big pullback happen, now that I've seen the push and the retest, and everything is now building up even more momentum for me, I can now move into a more of a safer trade, right? And now I'm in trade number 2, and I say, okay, now that I'm in trade number 2, I can definitely do a normal trade would be a 10x, right? That's kind of pushing it, but by doing that now, right? Like on trade 1, that was kind of pushing the envelope because we didn't have the pullback and the extra confirmation. So now trade number 2 can easily go off with a higher leverage, right? So normally it would be 10. So here I can even go with the 20x because I've had those moves and the confirmations happen, right? I can do a stop loss of 10% because at this point those big wicks should already be out the way. Do you want? Oh yes, please. There we go. TikTok. All right, I'm back. All right, so now that I have I have all the wicks out of the way, I don't need such a big stop loss because it's either going to continue up or it's going to go against me here, right? Because I've waited longer for the move to confirm. So I don't need a 20x stop loss here because I should have all the wicks out of the way. So now I can lower my risk of loss down to 10%. I can raise up my leverage to 20%, and I can target my same thing. I can go for my 30%. Why I can go for my 30% is because I'm doing, I'm targeting a 20x leverage, so I don't need that much of a movement there, right? So it should get to my target pretty simple, right? So that right there is very simple. So now if I lose, right? Now if I take my loss, I'm losing 200. And if I take my win, right, I'm going to get what I want out of here. I'm going to take my 30%, which is my 600. So right there, that is basically by being patient, I can run. And let me bring trade number 1 over here. I can run these options a little bit different, right? So now instead of the 10x 20% with higher probability of wicks taking me out here, by being patient, I can now run a 20x, increase my ability to get the win, but I'm also putting on here, I'm taking my losses to a situation where they're in the same scenario as trades 1's riskier trade, but my target's 600 per 600, but I've already removed 50% of my risk, right? So I guess what I'm trying to tell you here is by being patient and letting things to manifest more for you, you have the ability to then make trades with higher leverage, which will guarantee that 30% target and lower the risk of the wicks that come with it and give you your 200 to 600, which is your 3 to 1 option, but just with a little better scenario there, right? So does that make sense, Joey?
Yeah, I'm with you because it's like if you it's almost like instead of fighting like a wild fighter or whatever, you got this like you fight with a unique style. You don't have to come out and do all this and that. You just sit back and like execute. So you're not taking some wild crazy shots. You know what I mean? Like
Mm-hmm.
when you're in the ring,
Yeah.
like that kind of thing. I don't know.
Yeah.
That's how I. That's you know,
Yeah.
like
You're
if I
coming.
was just really jump up there and make a like the trades like I do instead of being calculated, giving the data and following the system. Yeah, I'm just running out there, ready
Yeah.
to sucker punch. And I know it, or I'm going to come at you with my gloves. I'm going to be like, all right,
So
I studied this dude a little bit. Here we go. Let's go, man.
yeah. So basically, it's like going out there knowing that he's strong, and you're just hoping you can avoid it. Instead of going out there going, I'm gonna stay far back and let him swing till he gets tired, so that way when he does hit me, it hurts less.
Yeah.
Like I know I'm gonna get hit, but instead of taking the first 100 punches at full power, I'm gonna let him. I'm gonna get to the third round before I attack. you know.
Yeah, I was going to say, take your.
I'm gonna let. I'm gonna let him. I'm gonna let him get a little tired out. Right. I want him to. I want him to swing his hardest and miss me, and then I'll be willing to take the jabs. Right, exactly. That's actually a good analogy here because that's what we're doing here. Is what we're doing is we're waiting for the one thing that can hurt us, right? So the way to really think of this is like this: if once I see a trade setup and I'm ready to go, and I make the decision that this should be a trade, right? Because I'm getting my moons there. This is the pullback. It looks brilliant. This should actually be the trade we take is on this orange arrow here. Like we should take that trade. But if I say to myself, I'm going to wait for his Hail Mary, and then I see this big dump happen, right? That's where I go, oh, there we go. And I hop in here. Because once I seen this big pullback happen, that was the move that normally takes me out. So now that move happened, I'm safe to get in because that's one power shot out the way. Right? Now I get in and I take that move to the upside. That makes sense? So let's kind of
You would just take it up, not get greedy. You're not going to hit the top, but just like everything else, you go up, get what, like say, get you 30% or whatever, and then hop back out because you know you're going to get retested again. Just drop them right back down.
right, exactly. So then, kind of like taking that, let's move to the next orange over here where we can see what happened again. This will be the same scenario, but this time we just wait for it to play out, right? So this would be if we're looking at this particular trade. Here's the same scenario. Here's the orange line, and that orange line represents basically our 3-hour moon with a 30-minute pullback, right? So all that's happening here is we're in the same scenario, right? We need to, if we're being patient, the only thing that we're really doing is we're just waiting for that move that would hurt us before we make a decision. So if we had this laid out and we get a 3-hour moon, right? And then that 3-hour moon, which shows this pump here, we can see the 3-hour moon and the 30-minute showed a pump, right? And what we're waiting for here is a pullback that we see that we like, right? And this right here shows a very weak pullback that comes across there, and then we can see where it basically consolidates, right? So there's the push. Normally it would pull back and retest and go up, but we see that it actually, what it does, instead of doing the pullback, we see that it's consolidating here into strength, right? You see this area here? See how it went sideways? So instead of pulling,
it's building momentum.
yeah. So instead of pulling back what we were waiting for, which is we're waiting to protect ourselves, we realized that it pulled back, but it didn't pull back as far as it normally should. And then all of a sudden we see a green, red, green, and right the second green comes in, then we get a bigger candle and we say, "Oh, this is momentum." Then we decide like, "Oh, okay, This is showing me. And then we see this big arrow that comes in that little. Remember that we talked about them impulse candles, right? So you see here on this candle here, you see how it pushed up real high, pulled back. We would take the entry there. So now this entry here puts us in the same scenario where we're trading with the momentum, and by waiting for the pullback, we've already got the one of the power shots out the way. So the possibility of winning this trade's a lot higher because we've already dodged a bullet, right? So you can see here this trade once again does 1.25%. So if we go back into what we're doing and looking at our leverages here, normally what we're going to do is how we play this trade out is we're going to do something like a 20x leverage. And this right here hits the 30% target, right on the chin, right? And by being this patient, this is where when we see these type trades, now that we're looking at them, we can see that we actually need to go to a level of not a 20x leverage, but we should probably be using somewhere around a 30 or maybe 25 or 27, because we're seeing that we need that 1% move, right? Because we want to stay in those 1% target zones. So that's where we can say, okay, if I'm doing a 30x leverage here, I'm going to get where I need. And then based on what I'm seeing by pullbacks, my pullbacks are normally sitting at about a 0.5, let's just say half, which means that on a 30x leverage, on a 0.5% pullback, which would be here, that's a 15% stop loss, right? So that's where we would set our system up and say, okay, I'm going 30x leverage, 15% stop loss, right? So now this trade starts to develop to where now we're getting into our trade number 3, right? Which is very simple. It's a 30x leverage, a 15% stop loss, and target stays the same, 30%, right? And this is how once you start making your trades, you'll start to evaluate the trades that you're making so that you can start, seeing the data, right? So now let's go back over here. We're going to take another look, the next orange line, to see what we have, and it's this one here, right? Same scenario. We come in, we got everything that we want, and what we're looking for is a move, right? So here we're getting into a trade, and we can see that it explodes up here. There's a big move to the upside, which we expect. We wait for a pullback to happen, right? And you can see here we do get the pullback that we're looking for, but we don't see anything that's like that continues on to show us that we're looking for a particular buy in this zone, right? Because we see the pullback, and this is where you'd have to, as you develop your trade, like, all right, I'm seeing my pullback. I'm not seeing what I would want here is I got to move, but I would want to see consolidation to kind of like a higher high or some type of move, but I'm not seeing a lot of volume here, right? So then if you're patient, you're waiting, it takes you all the way down here to now you're in this section here, and you say, oh, I'm going flat line here for a while, right? You see that and go, okay, there's some consolidation, and then there's a big drop. Next thing you know, you realize that you start to see the charts start to build, right? Because you're being patient, you don't really care. You start to see, here's a push, right? Here's another push, and then you see the pullback, right? So you would be looking way down here for this particular trade to circle back, and you'd be looking for this retouch there. And that's where you would start looking to get into a trade, would be more down in this section over here, right? So that's where starting to see volume and starting to see where when it had this big pullback, right, I wanted to see it make higher highs. But in this section here, it didn't really make higher highs. It kind of pulled back, had a weak bounce, right? Because you see where it became a green candle, nothing happened. The next section, it became a green candle, nothing happened, right? So there's the first green candle. Nothing really happened on that green candle there, right? It was just kind of like a one candle. I need at least 2 or 3 with big wicks. Nothing. here, nothing, right? And then it doesn't start to build until here again, and it's not really showing momentum here, right? And this is where your strategies are going to kind of come into play. What else do you need to decide that this is going to be a long? Because this isn't how to do a long. This is just to show you that if you're patiently waiting for things to develop and show you, better strong situations, by waiting, just use leverage to make up. This trade right here looks suspicious, right? I mean, if we were looking at this trade, does anything in this downfall look like we should go long? Like, I'm just asking everybody in the Discord. Does anything there look like, oh yeah, this is reversing? Does it, just from looking at it?
Yeah, it's just like a mini roller coaster bond.
Well, I'm not seeing anything here that would say to me like, oh, there's volume here, I'm just not seeing it.
It's almost all red. You just got a little bit of green, and even with that, there's red in between.
Right. So then if we go to our...
And it's just steady down.
Yeah. So now if we go to our tools that we use, right? You can see here on our tools that this entire section here, we wouldn't take any trades because we know by using the moon indicator, none of this shit is above the 10 threshold. So for us, the 10 line on the 10 minute that has no volume. So this entire section would go dead. So you see here, we have the orange arrow which creates the buy zone, right? This right here is our buy zone. Now, once that buy zone happens, we wait for the pullback, which is simply the 10 minute, right? What we're looking for is for it to bounce somewhere here and go up. But it just keeps going down. What happens there is the volume then becomes lower than the 10 line, then it becomes lower than the 0 line, and then none of this entire section here actually becomes a trade because we are sitting with an area that's below our 10 threshold. Does that make sense?
Yeah, because if it's not crossing the 10, it doesn't even matter.
Right. Doesn't even matter. Now, most people, they don't have a moon indicator. So they're just relying on, patterns. But what I want you guys to kind of like always have in your head is volume matters, right? You can see there's no real volume. You can use the moon indicator and go, man, this doesn't look that strong. And then if you look at the moon indicator, you're like, damn, there ain't no money here. Like I'm over here trying to do a long and there's no money, right? Now, we know that based off of the strategy of a 3-hour moon and the 30-minute volume push and retest, we know that there is volume around here, right? We know that volume wants to, it's lurking, right? It's over here, right? It's definitely in this area, but we can see on the 10-minute that currently this is a sell zone. And we can just wait, right? So as we start to wait, we start to see the volume manifest again, right? So here, you see the 10-minute, what's it do right here? It breaks the 10 threshold. Then, what do we want to happen? We want it to go down. This is what we wanted earlier. Then we want it to head up. That is where we would come in and we'd be looking to buy up above, you see? See how that played out? X, what's up, baby? How much is the moon indicator? The moon indicator is free, man, as long as you're in our Discord and you're trading with us. And you got to have TradingView. But you see here how this section here is what we wanted to happen here, right? That's what we needed. We needed we needed this 10-minute version of volume to actually happen here is where we needed that to happen. Does that make sense? But it didn't. But when it did
Yeah.
happen, we can see that when it does happen, if we play the way that we understand, which is, okay, here's the 10 threshold being broke on the 10-minute, we need a retest of the volume above the 0 line, and then we're buying that bounce, which happens right here, which puts us right on this section here. So if we look at this trade, drop this arrow down, then we know that we should be entering on this candle right here, right? Now the thing about this is that this isn't the first move, this is the patient move. This is us. Remember the first move that and we could be successful on. And I want to show you like the first move when this actually happened, which was over here. The original move is this, right? This orange arrow represents volume. So this is let's say if we were just trading the basics, right? You have a 3-hour moon and you catch a 30-minute up move, right? There's your entry. Like if you played it just like that with no pullback and you just got in, you have a situation here where this move here does 1.5%. So if you're doing a 30x leverage, 15% stop loss, right? You win this trade, right? Now we don't know, right? Because this is the first time we just kind of like I just picked the very simple things, right? I picked a 3-hour because the market conditions getting a little better. I picked a 3-hour moon, and then I for my momentum, and then I picked the 30-minute volume above the 10 threshold or a retest as my volume. So I'm using the moon indicator instead of the RSI as a double. That's why you guys see me posting in the Discord talking about the moon line is heading up. So what I'm doing here is I'm using the moon line as an RSI step one, which is we need momentum. So now I'm using the higher time frame moon lines as momentum, and then I'm using the 30-minute lower time frames volume above the 10 threshold lines as volume indicators, right? Let me say it again. Instead of the RSI for momentum, I'm using the higher time frames of the moon indicator lines heading up. And then I'm using the 30-minute moon indicator for volume, right? Because remember, our strategy is this. Strategy is you need the momentum, then you need volume. So momentum is the higher time frame moon line going up instead of the RSI heading up. And then the volume is still the moon indicator on the 30-minute, right? So for our volume indicator, what do we like to have? A 1-hour green moon, right? And volume above the 10 line on the 10-minute, right? That's kind of like our basic. Does that make sense?
Yep. I know.
So now that we can see that this trade is hitting and winning, right? Now, by being patient, you're allowing yourself to then kind of get into the moves that have a little more, you know, maybe a higher probability of being successful because you're waiting, like you said, you're letting the box, you're letting your opponent get tired before he hits you, right? So far, that's kind of where we are. That's just the basics of it. So if we take another look here, I'm gonna take a look here at this next orange. I'll do these two here. Here again, the orange line comes in. It is a successful trade. If we would have bought on that time, we wait for no pullbacks and we just hop in, we would have had a successful trade from there. If we did sit back and we wait for the confirmation of the push, then our entry would have been here. Still successful trade. So that worked out fine. Now here, let's take a look here. Here that comes in, let's measure this out. So we would have had a buy zone off the top of this. That would have got us to a 0.8, a 30% win of hit there. So we would have got stuck in this trade here. And this trade would have been a losing trade because it did pull back on us because our entry is here. So it means probably our best entry would have been somewhere around here. And if we measure that up, doing a 30x leverage, oh no, we'd have been, yeah, it would have been close. That would have been real close. But that entry would have had to been on that candle somewhere there, right? So that would have been real close. I mean, more than likely, we probably win that. Now, if we sit here, we let the pullback comes in, and we look for volume. This is that scenario again where if we're looking down at the 10-minute, we can see that we want the pullback to happen and then a bounce. That doesn't happen. Now that runs all the way down. Now let's see if the volume returns. That means that we would be watching this trade and we would be waiting for volume to return, right? Which would then come down to here, which is kind of in this section here where we get the 10-minute break in the threshold. And then we'd be looking for a retest. It doesn't happen again. And then that takes us all the way over to our next move, which is, it would have took us to where we waited for this 10 threshold to happen again, which is over here. This is where we see the 10 threshold break above the 10, and that brings us the retest, which would be an entry into this point here, right? And that would have been a big trade. So by being patient, you see how we just eliminated one of those losses? Even though it was close. I mean, don't get me wrong. We probably would still would have won that trade, but your entry would have had to been really good. So the probability of that is basically so far, and this is here's a strategy that we can look at and develop, and then go see how it's playing out. But so far, it's been pretty successful. But what we're looking at here is every time there's a trade that you're getting into, if you allow the pullback to happen and then get aggressive, you're pretty much knocking out the punch that can hurt you, and then you're putting yourself in a situation where you're using leverage to be more patient. Just an example of, by being patient, you don't need to jump trades. You can be patient and use leverage to make up the difference. Is pretty much what we were really covering.
So, like, when you're in the middle of this action live, right? We're watching it.
Mm-hmm.
What lets you know? Like, what's your trigger that the pullback is? It's like it's in its bottom or in its top. What are you looking for?
So say that, like, are you talking about what, like, for the pullback?
Yeah, like it.
So here, let's go.
Speaking like before it happens, like it.
So I'm just waiting for volume to pull back, right? So here, let's go look at the current trade, right? So
No. Like, I hear you saying you're waiting for volume to pull back. Is there like a metric that you're looking for that says to you, okay, that was the pullback, or the pullback has started?
yeah, so here's the current.
It's when you're looking at. It's like when I'm looking at the chart in reverse. It's like, okay, yeah, that's easy to see. But like, I see you already moved over, so you know where I'm at.
Yeah.
You know how I learn. Appreciate it.
So here's our trigger, right? Now, if we would have bought this trade, right, we'd be in the scenario here, right? So if we pre-bought this trade, here's where the arrow went off, right?
Uh-huh.
We dig into this, we have a red candle, right? So we would have bought somewhere on this candle here. Let's do the top and say it was a bad trade, right? Or a super bad entry position. That's where we'd be. Now let's just measure that real quick and see how we're doing. Now we need a 1% move because we're going to be rocking a 30%, right? Did we hit our target already? Yeah, that's what I'm saying. Like this trade is already, now that we've kind of like looked at this, strategy, it's hit every time, right? That would have already hit. Now let's say if we're playing the game where, so this trade would have won if we would have just followed that, which is what I'm already in. So I'm already in a Doge long. Not on this one, I'm on the other one, but I'm in a Doge long right now. That was playing pretty much that movement there. So now let's take a look at the chart and say, okay, let's say we're being patient, right? So that trade would have paid off. We would have hit our 1%. Nice, beautiful. So now what I'm looking for is a pullback, right? And you have a couple pullbacks that kind of happened here. You had the 10 threshold go up. Here's a pullback here. And you're playing into these pullback moves where you're looking for the 10 threshold to retest and then make a move up, right? The other thing is I'm waiting for a retest, right? So remember, part of what we were talking about earlier was this, that this is, if we're looking at this, the white box is what already happened, and from the orange line, that would be the future, okay? Because that's where the line hit for us to go in, right? So what I can tell from the previous information is this, right? So from the previous thing, I can see that there is a lower threshold here or support line, and I can see that I have my my tops there, right? So I'm gonna draw this white box across, okay? So what that means is I have my lower support, which is on this line, and I have my resistance, previous resistance, that would be the breakout, right? So normally when you see this, how the trade would play out, right? Remember, we're reverse engineering, is we would want to see a breakout from the resistance. We would then look for a retest. And that's where most people would have put their orders, okay? Now, that is the basic move that most traders are going to be trading here, which is kind of where, that's the trade that they're looking for, right? For us, what we would have been waiting for was this, right? We would wait for the breakout. We would be looking for one of the pullbacks to the retest, right, which we got, and then we'd like to see how much of a retest it took. So it hit the retest and now it's going up. So for us, our next thing is this. Where's the pullback from the bounce? And then that's our entry, because we're doing a double confirmation, right? So all I have to do to kind of see that is I go down to my 10-minute. Notice that my 10-minute went -0 there, right? But when it went -0, look at the candles, how they pushed up there, right? That's a show of strength. Does that make sense? So the 10-minute is going down right now, and what I mean by that is this. So you see where the 10-minute breaks the zero line? It's actually right here, okay? If I put that arrow up here, you can see that the big dip happened prior to this entire area that's actually like low here, right? So you see this area here, right? That right there is low volume below the zero line, which means this entire area here, which would be about this section here. Let me see. Would be right about there. So this entire section here is where we had a lot of negative volume there, you see? Now the thing about that is during that section there we have 2 or 3 green candles. You see those? Inside the red box, see what I'm saying? You guys see those? So what that is that it's going negative volume, but for some reason the green candles are coming back. And that's what people would call a divergence. All right, you'd call that a divergence, right? Where we're waiting for this 10-minute volume to go down and then come back up, and we're looking for volume that's actually going to show strength, which is what we can see here, right? Now, with that being said, this is where we would say, oh, I got red, okay, green, big wick green. Remember we talked about the big wick green, and then when it pulled back, we would be entered right here because of this arrow or this candle right here, because of that wick. That was a bunch of orders that came in, and then it filled and shot all the way back down because the limit orders of people selling, because people are panicking, caused that huge wick to go down. So we would be buying on that next candle because we know that the orders that are being filled currently in this section are the sell orders from paper hands, right? Now, the reason why we'd be buying right there is because we are trading off a long position, right? So for us, let's check the basics. So we're going to slide down here. We're going to look for a 1 hour green moon, right? We got a 1 hour green moon. And the 1 hour green moon happened here. 1 hour green moon. All right, so there's our 1 hour green moon. Second thing we need is we need 3 hour RSI moving up on the moon indicator, right? Which happened in 2 places. One, it happened here, and then there was the second move. That's why always having those double moves and being patient are important, because you let the original one get out your way. So this is the second move up on the 3 hour moon line. Does that make sense when I said that?
Yeah, I got you.
Yeah. So when you start to learn, and what I want you guys, what we're doing here is we're just starting to build the concept of risk, management, right? If you're always waiting for that confirmation or that next confirmation or for the strongest A trade possible, then you should always be in the best position. That's kind of like having the 1 2 1 2 3 move, right? 1 2 3 1 2 3. I want to see a move, which is 1. I want to see the pullback from that move, which shows me strength of volume. And then 3, I want to see confirmation of where it wants to go after it does what it does. So here we have the moon line push up. On the 3 hour. Then it makes its decision, right? So move 1. It then pulls back And then this is confirmation when it goes up again, which is here, right? Now we're seeing what it wants to do. And now it's building momentum. The odds of it doing what it says it's going to do the second time is better than the first because it's momentum, you know? It's like pushing and then pushing again, right? Think of it like this. It pushed the first time, it's filling orders, and all the sell orders overtook the momentum and pushed it down. And now when it goes back to that same level, those sell orders have been filled, so they're no longer in the way. Just like when you see a coin go down, as it starts to go down, it bounces at certain levels because there are limit orders to go long even though it's shorting. So it has to bounce because it's filling in orders, and then we short that next top because then the next time it goes to that level where it just bounced from, the odds of it going through that level are higher because it already filled those orders. Does that make sense?
Yeah, I follow you.
Yeah. So that's all you're really doing is you're letting, you're letting the game play out, right? So here, the 3 hour moved up, it filled a bunch of orders. That right there would have been basically where you go, oh, it bounced. Oh, it got beat up by a bunch of sell orders, and now it's moving up again. That's my entry, right? So here's our 3 hour up, right? Now we're waiting for the 3 hour moon, which is over here. This is just more confirmation of, the volume that we're looking for to make the trade that we want to get into. So delete, boom. All right. So now that's the basics. Here's our 1 hour. Here's our 3 hour move. That's the basic side, right? Because what do we look for? We look for sentiment, which is a 3 hour up. We look for the 1 hour moon, which is volume. We got both of those. So now we're in the position where the only thing that we're looking for, if we looked, we would be like, okay, let's not trade against our 1 hour RSI down move, which is basically, let's mark that off. The 1 hour down move with the moon heading down as well would have triggered somewhere in here. 1 hour RSI down. All right. So now we can slide over to our 10-minute. Let's see where we're at with that. Here we go. Everything is moving the way it's supposed to move. Let me get rid of that. I don't need that. Delete that. All right. So here's our 1 hour down, our RSI down move, right? Which happened here, right? Which is the down move we got. And then what happened with these orders here that filled? These orders filled because on the downward move, there's a bunch of people that are buying this buy right here because that's the retesting of the resistance, right? And that's why we're seeing this bounce. So right now, technically, based on volume, right, we should expect this to kind of go sideways here, come back down again, and get into a consolidation zone, which is probably something like this until the 1 hour starts to head back up. And then that'll be the breakout. So once it gets to here and it breaks out here, it's probably going to repeat the same thing where it could break out and then hit a retest and then break out again. But either way, once it breaks out of this section here, you are going to see this, play into its trade. But right now we're in a 1 hour down, so we can expect, a pullback in there. And then if it doesn't, like we always say, if it doesn't do what it's supposed to do, then we know what it will do, right? Meaning that if it doesn't, if it's not heading down with the 1 hour heading down and it's heading up, then we know that it's building momentum. So right here, we know that we're in a 1 hour down. This should be heading down, but it's actually starting to head up, right? So it's building momentum here. So that's, that's where we're at. So I think, The original thing was like, well, how do we know when we're going down? Well, we know we're going down because the 1 hour starts to go down, right? The 45 minutes starts to go down. The basic shit. Here's your 4 hour RSI starting to head down, right? Right. You can use the same thing how we use the 30-minute for volume to go up. You can slide over to your 30-minute, watch the 30-minute RSI. 30-minute RSI is heading down. That's how you know you're going to get a downside to that, right? You look at the moon indicator, 30-minute moon indicator starts to head down, right? So where does it start there? Same place right here. Starts to head down just like the RSI. RSI starts to head down here. You can kind of pick it up from this section there, but yeah, pretty much the same move. And that's how we know we're going to get down. Now that this down move is happening, this is where we start to say, oh, this is my entry time. I got a 1 hour pullback, a 30-minute pullback. This is where they're going to give me the opportunity to buy a deal, right? Which is where we should have been sitting on the 5-minute here, looking for consolidations on the 5, the 10-minute here, and we could see it here. You get red, 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 and then boom green, and then we see this big impulse candle that fills all the orders, which allows us to buy there. And right now we're just whopping through the orders, and you see at the bottom of those candles as we start to move, notice that the wicks are gone, right? We're no longer going up and down, we're only going up. There's no more, those orders are getting filled. So eventually all those sell orders, which happen to be in this little zone here, are going to end, right? So the only, now here's, okay, so you see where it started to go down up here? See this top here? That's the sell zone, okay? That's where people put their limit orders to sell. So once we get back to that position, right? Once we get back in this area here, I'll make it white. Once we get back in that position there and we break to that position, we're not going to run into a problem here. We're going to go through this because we've already filled the orders. Does that make sense?
Yeah, 100%.
So that's why we're in a long in Doge. So right now I'm currently in a long, and I'll post you in Discord so you can see where. Screenshot. Okay, position. Mark it up. All right, so I've got a 23x long position, $1,300. We're up 26% right now. So this is a live trade right now that I'm in, and I'm trading this to this upside here. But I got in on those original moves, right? What we're looking at right now is me explaining to you guys that, you know, if we take the concept here of risk and reward and systematic trading, there you go. So that's my live trade right now. So if you take it and understand that, you know, by waiting for the you know, like you said, you're fighting a boxer here and he's doing what he's doing. If you let him tire himself out and you wait for the blows that could take you out, and you just start to work towards, you know, building it into where it's a safer move, you eliminate basically, I'd say, 80% of the trades that went against you. Just by being systematic. Because the way we're thinking now is, how do I protect against a loss? See, we're not trading to win anymore. We're systematically trading not to lose. Does that make sense?
Yeah, minimize the losses.
Yeah, because that was the only thing, like, I was like, you know, the whole thing about professional trading is the logic behind it is, someone gave you 100 grand and your job is to only lose 1% of it and make 5 to 10% when you win, which means you can lose 5 times, win once, get the money back, win again, be up 5%. So if you win 3 out of 10, you're up 10% for the year. right? And I was like, well, that, and the reason why that factors into trading is because it's a way to understand why people take profits when they do, and why coins pull back, and why things do what they do. Because people aren't trying to push the limits. They're not trying to go to the moon. They're not trying to, make 100%. They're trying to make 7, 8, 5 to 10%, right? And then once that's done, they don't get back in that trade until it presents that opportunity again. You understand? Systematically, you're trading against, you want to be trading at least not with the retail, right? Because that's what the RSI is, the sentiment, right? That tells you what retail investors are doing, and that's pretty much buying and selling kind of recklessly, right? But if you get enough of them, it creates a river. So mad about that. The so the so the sentiment or the momentum doesn't guarantee money, right? That's why the moon indicator is so important, because moon indicator says, hey, this money's coming, this money's holding, right? So when it has all that in there, trading with the money is the what you want to do. Trading with the sentiment or the momentum just helps you be more successful when you're trading with the money. And now, if you take in consideration one more step of double checking and having confirmation that you're trading with the money, then your success will then have another level of winning percentile, because now you're confirming that you are trading with the money, because the pullbacks and the things that would normally hurt you are out of the way, or you let them happen and then you enter, and now you're in the spot of, I've avoided one bad trade already. The odds of me losing this trade twice is probably low. You see what I'm saying? So by being patient and using leverage to your advantage, which is allowing you to be more patient, will put you in a situation where you're more successful. So that's what we're focusing on now, is building the, what you got, Ed? Mm-hmm. Is building the um, is building that, the ability to, think through the trades a little bit more, so that by being patient, you're no longer emotional, you're systematic, right? And if you're River XDC's like, River, let's go. Um, but by being systematic, you're seeing that you can be more patient and just use leverage to make up for your patience. You're still winning the same amount of money. You're just taking less risk, right? So now that we kind of worked through that today, we have a basis of, our formula, right? 30x, 15% stop loss. You know, waiting for the pullback move that normally takes us out to get our push. Waiting for volume confirmation that even though it should be going down, it's going up. So we get in that trade, right? We're just confirming all the things that we're waiting for, and when they start to happen, it just confirms for us, like, okay, we're just double checking, right? Being patient, waiting for extra confirmations just allows us to use, more leverage, higher things, and get the same result that we're looking for. I mean, kind of like on the live trade there, the same situations as you pull across. If I'm doing my 30x there, right, I'm up 36, 37% right now by being patient. So that's really one of what I kind of want to we start throwing in there to basically build that into the concepts so that people can, you know, find a better way not to be emotional, right? The hardest thing about the trading side is systematically. You gotta trade systematically versus emotionally. And if you're always trading systematically, then you just do trades based on what you see and what's in front of you, versus like, yes sir, CDO got his 2K. Um,
I'm a clock out.
yeah, we're
I'm in
out.
trouble with my girlfriend on 420.
Yeah, you better get mad. You better, happy girlfriend, happy life.
Mary Jane said I better get my ass off this live.
Mary Jane said, "You better get home." What?
It's Mary's birthday, baby. Come on.
Oh my God, I'm 420. Oh, you.
I'm good. 420, baby.
420. All right, man. So I'm gonna hop off
Yep.
too, guys. But I just wanted to cover that,
All right, brother.
and that makes sense, Joey.
Yep.
Simplicity.
I got it.
All right, man. That's what I like to hear.
I'm locked in.
Joey locks
All right,
in,
brother.
man. Everyone should be locked in. Later, brother.
Yeah, whoa. Don't set the bar that high. All right, man.
Later, guys. All right, guys. So that's what it is, man. I'm gonna save this live here, put it in the Discord. If you need to go back, watch it. But this just helps you guys out to where you understand that, right? So we're gonna hop off here.